Oh, hello everyone. It's Susie from Esoteric Trading Solutions. I hope you're all well. I hope you're all being kind to yourselves, being kind to your family and your friends, being kind to your animals, your putty cats, your dogs, and any sort of pet you've got, and just being kind to people in the world to make this world a better place. Happy New Year to all my Australian subscribers, and Happy New Year to people in Europe and America for tonight. I think it is today. It's the morning in Australia, the 1st of the 1st. So just want to do a YouTube. Just go to the next slide. Someone sent this on my LinkedIn. I really liked it, so I thought I'd just put it on. The 2% mindset, which is 2% of the population. It sort of reminds me a little bit of crypto, which is even less than 1% of the population. Going for your dreams, confidence, exploring new things, choosing happiness, fulfillment, getting the most out of life, embracing the unknown, excitement, liking change, living without limits, abundance, act in spite of fear. And 98% of the population is in this circle, being like everyone else, insecure, surviving, your comfort zone, just getting by, dull life, play it safe, procrastination, regret, and settling for less. And it just sort of reminded me of the cryptocurrency market, so people that are invested in it. So I thought I'd just put that up. Today what I'm going to talk about is Ripple, R3, and DTCC. And basically I've called it a spider web of connections and investments, because that's pretty much what we see when we look at the background of all these different companies, and there's just interconnections interplay all over the place, and there's interconnections between the different ecosystems as well, and the distributed ledger, technology, and blockchain. So it's quite an interesting puzzle to look at, and I think it's going to be a very, very interesting year for 2019 with cryptocurrency particularly, and I think it's going to be quite a big year as well. It's in a market that's been down for about a year and a half, and I think it's going to be quite an interesting year this year, so it's going to be very exciting. So just going to the next slide, this is an article from Cointelegraph about R3 adds Ripple as a first cryptocurrency for its universal payment app. And obviously R3 and Ripple sorted out their legal battles and that sort of thing, which is great. And now R3 has announced with Ripple that they will be using their cryptocurrency XRP to support their universal payment system platform. And that was announced on December the 5th. Obviously R3's got the quarter settler, they call it, and essentially they're using that to settle via any payroll payment rail that supports cryptocurrency or assets, or any traditional payment rail that can provide cryptographic proof of settlement, POS. So a payment rail basically is just a payment platform or network that transfers money from one business or one bank or one entity, the payer, to the payee, the person that's actually getting the money. It did say in this article that the future version will support real-time gross settlement payments. And what real-time gross settlement payments is generally within the old traditional term of finance and settlement processes. Real-time gross settlement is something where something is actually paid and it's cleared funds within about 30 minutes or so. So a bank will pay another bank with real-time gross settlement, which means basically the settlement is funded with real cash, and that cash is cleared funds. It's not against anything else, and it's cleared funds, and the bank can actually draw down on that funds. Not like a check, or not like a direct debit where it's still waiting to be processed through the bank's SWIFT system. Real-time gross settlement will actually hit their exchange settlement account, and it'll actually be real funds that they can actually use to go and purchase an asset, and it's cleared funds. So it's a bit like when you've got a bank account and someone's sends you some money, and you'll have available balance where you can draw down on it, but there'll be another balance on that statement or on your internet site, and it'll say funds, but they're not available because they haven't actually cleared yet through the banking system. So Richard Gendall Brown, Chief Technical Officer of R3, said that this deployment of the quarter settler and its support for XRP as the first settlement mechanism is an important step in showing how the powerful ecosystems cultivated by the two of the world's most influential crypto and blockchain communities can work together. So it's going to be very interesting to see how that goes, pretty much through as time advances. Also, we've seen going forward, there's a connection with R3 and SBI Ripple Asia, and they've announced a joint proof of concept with Japanese payment card consortium to combat fraud using the Quarter platform. Now, if you remember rightly, SBI Ripple Asia and Japan, there's something like 60 banks in a consortium, and they're all going to be using Quarter as well. Okay, now if we look at R3's website, just want to go through this fairly quickly because I'm trying to keep my videos down to a certain amount of time. Some people complain they're too long. But if we look at R3 website, they're saying all their partners are ABN AMRO, Commonwealth Bank of Australia, which we know does business with Ripple and uses Ripple's XRP system, and they've been using it for some time, since about 2015, as a pilot test, and they've been using it intra within their own banking units, not externally, but intra rather than inter, which is external. So CBA is a part of that as well, as a partner to R3. You've got all the big names here: Barclays, BNP Paribas. Going down, you've got BNY Mellon. Now, we know BNY Mellon, one of the owners of BNY of Mellon, invested in XRP and actually had 3 billion of XRP. So there's all these interconnections. Everyone seems to be invested with everyone. Other R3 partners are all these here: Credit Suisse, Danske Bank, HSBC. Again, these names are, you'll know. ING's huge, Macquarie Bank, which is Australian, Deutsche Bank, you'll know. Going through the list, some big, obviously Japanese banks in there. Nomura is huge. It's a huge investment house out of Japan. UBS is very large. Westpac is an Australian bank. And again, Westpac use Ripple's technology as well. So there's all these interconnections. They're a partner with R3, but they also use Ripple's technology too. If we go to the next slide here, if we look at R3, according to Crunchbase, I like to look behind a company to see who's funded and who's got money in the company. And again, it's a lot of R3 partners that they put on their website. And 43 investors have given R3 money to build their blockchain, their Quarter system, $112 million. And you'll see Barclays there, Wells Fargo, Royal Bank of Scotland, Nomura, as I said, Danske Bank, Bank of Montreal, BNY, Toronto Dominion, all these banks that you'll know, Citigroup, for example, CIBC, BNP, Paribas, some of the biggest banks in the world. Commonwealth Bank of Australia is there, and again, those guys, have funded. They're not one of the main lead investors, but they've certainly given them money. And also, what's interesting here is Northern Trust, which is one of the biggest fund managers in the United States, but also Northern Trust operates in Victoria here in Australia, and they have a lot of funds under management as well. So these have all put money into R3, so they have skin in the game, so to speak. So there is a lot of connections between different banks and different distributed technologies of R3 and obviously Ripple. R3's connection with DTCC, which is called the Depository Trust and Clearing Corporation, DTCC. And if you look at this article here on the 7th of November, the banks, they tested with 15 major banks, and they tested distributed ledger technology for their credit derivative projects. Now, credit derivatives are basically like any sort of derivative, but they're mainly focused on credit. And a credit derivative can be a swap. It can be a credit derivative against a company or even against a country. So, for example, if you pay on the credit derivative, you're basically ensuring yourself that there's not a credit default on an underlying bond, okay, or an underlying company's government securities. It is big business. Traders will trade credit derivative swaps and they'll also, if they run very large fixed interest portfolios or bond portfolios or government stock, government bond portfolios, they will often buy credit derivatives to hedge themselves in case that they have counterparty risk or credit risk against a government. I mean, for example, they could be holding Italian bonds, and Italy's been doing very badly lately under the European Union and the European Central Bank. They've been forcing them to basically pull in their budget, stop spending, be fiscally more responsible, and basically Italy's credit default swaps have basically blown out to smithereens because people are actually worried that Italy is going to default on their bonds that they issued in the capital markets, and investors funded those bonds and gave Italy money for those bonds. Now, if they default in the capital markets on their bonds, they will get a credit downgrade by Moody's and Standard & Poor's, which are the largest credit rating agencies in America, and the credit default swaps, which are credit derivatives, will blow to smithereens. In other words, someone that's got credit protection, they might have got credit protection against Italy's paper at 250 over the swap curve. If Italy gets a downgrade, those credit swaps will suddenly go to 500 or 600 over the swap curve, and that person's paid only 258 will make money, and that'll offset the loss on the bonds they're actually holding, and that's why it's called a hedge. So if they're holding Italian bonds and they get a downgrade from the rating agencies, the bond will go from 100 down to 77, say for argument's sake. The interest rate will go up and the price will go down because there's an inverse relationship between bonds with price and interest rates. And the credit default swap, the spread on that will move out. So what happens is they lose money on their bonds, but they make it on their credit default swap. And that's what we call a hedge in terms of capital markets, okay, financial capital markets. So basically, coming back to Depository Trust and Clearing Corporation, they are a huge corporation. They're basically a custodian, and they basically process all the credit default swaps around the world and any sort of credit derivative. Now, it could be an option on a credit default swap. It could be options. It could be anything that are related to credit, because investors or speculators are trying to protect themselves against a credit default or a credit downgrade. And when you get a credit downgrade in the bond market, the bond will sell off. In other words, the price will go down and the interest rate will go up. Okay, so DTCC are basically a custodian. They process all the transactions for credit derivatives, but they also process transactions for other markets like the equity market and for different markets. Now, also they've been testing with different systems for DLT, and basically they've also been using other platforms with such as MarketServe and their new credit platform TradeServe. Now, MarketServe is very well known in the fixed interest markets and the credit markets. They do mark to market. They produce risk management reports. They produce all sorts of analytical tools to assess credit and to assess the risk on credit portfolios and credit stocks, credit bonds and credit derivatives. Okay, interesting thing about MarketServe is basically DTCC, the Depository Trust and Clearing Corporation, own them. It is a joint venture essentially, and that's happened since 2013. So all these organizations, which I found just with a little bit of research, all seem to be linked in some way. There's all webs, webs of, spiders' webs. They're all linked, and it's quite amazing. And what that tells you is everyone that's in the market now, whether they're a traditional bank or a traditional company, or whatever it might be, or a traditional, trading house, don't want to miss out on the opportunity of distributed ledger technology. So there's a lot of investment going on in the past, and now because they don't want to miss the opportunity of getting involved, because this will get bigger and bigger and bigger. And you'll see that with the next couple of slides. So going back to DTCC, Depository Trust and Clearing Corporation, basically provides clearance and settlement and asset servicing for equities, mortgage-backed securities, government bonds, corporate bonds, municipal bonds, derivatives, money market instruments, syndicated loans, alternative investment products, and insurance type transactions. So they will do clearing, which is the settlement clearing, for all, the counterparty services. Everyone will use these guys. All the big banks and the big trading houses will use Depository Trust and Clearing Corporation to settle all their deals, okay? And they will expect them to settle them, within a certain time period. There will be a netting of a lot of deals. Some deals will be, buying, a mortgage-backed security. Some will be selling them, so they net those deals. There'll be trade confirmations done. There'll be post-trade matching processing, and there'll be valuation data. So, for example, deals, will be, revalued, for example, because it might be trade today plus 2 days settlement and those sort of things, okay? Also with credit derivatives, as I said before, there may be a life cycle, of course, because a credit derivative might be a 3-year credit default swap, or it could be a 5-year credit default swap, and it has to be valued mark to market. So in other words, it's got to be valued against a swap curve and a credit curve for that underlying entity, the underlying corporate bond, or the underlying country. Okay, you understand what I'm saying? Or the underlying government bond. So it has to be valued against a particular curve and a whole lot of different curves. And they could be using exponential spline model and all sorts of things. I know there's a lot of technical stuff that I'm saying here, but it's quite complex. And this organization would have all the tools and the risk management tools to value all these complex derivatives properly. Okay, and that's really, really important. Now, the thing is, this organization is still using the old systems, okay, and the old settlement systems, particularly, the main one being SWIFT. And again, as we know with SWIFT, it's like a horse and buggy. Essentially, people, even if they do, a trade today, it's going to be T plus 2. So I do the trade today, the first, and the cash will not settle until, the third, okay? They could push it for T plus 1, but it's very difficult with the amount of deals that they have going through the settlement process. It's a massive, massive job and very, very complex. So just going forward to the next slide. Have I gone too far? I hope not. So if you look on LinkedIn, it basically says what it is. These guys are in, DTC has been around 45 years. They're in 16 different countries in the world. They've basically, they process, including this, their subsidiaries, they process 1.6 quadrillion, which is a lot. I mean, that basically is, I think it's 1,000 trillion by a trillion or something like that. It's a massive amount. Quadrillion is a trillion, I think. A trillion by a trillion, something like that. I mean, we're talking a massive amount, right? Massive, seriously. To put it in context, the government, the fixed interest market, government bonds, mortgage-backed securities, and everything else is a $60 billion market. The global equity market is a $60 billion market, right? Give or take 5 billion, right? So if the government, the fixed interest market's around 80 billion, 85 billion, and the equity market's around 65 billion, we're talking about the derivatives market and the value of the securities that they process of 1.61 trillion. Now, I know the derivatives market is about 1.2 quadrillion. So we're talking huge amounts here, huge. Okay, and they're in 131 countries, and we're talking big biggies, like big, seriously big biggies. So after his connection with DTCC, you know, basically in that article, you know, they've mentioned they've been testing distributed ledger technology for some time, over 18 months, with IBM, Axoni, and R3. And R3 is acting as a solutions advisor. Okay, we don't know in what capacity, but they are certainly advising them for solutions. Okay, now we know who IBM are. They're working on their own blockchain. Yes, they're supposed to be using Stellar, but again, IBM don't need Stellar. IBM are actually working on their own blockchain. That's the reality. Stellar is small fry, seriously. You know, they have a connection with Stellar, but in my mind, Stellar needs IBM more than IBM needs Stellar. IBM has deep pockets, and they could literally create their own blockchain. Okay, so you know, this report came out in October, but apparently it's a recent report led by DTCC found that distributed ledger technology is scalable enough to support daily trade volumes of the US equity market. The 19-week study conducted in collaboration with Accenture and R3 purportedly proved that the DLT is capable of supporting an entire trading volume at peak rates, which can hit as high as 115 million daily trades, or 6,300 trades per second for 5 continuous hours. Now, the reality is any other DLT or blockchain, if we're talking about using Ethereum or Bitcoin or whatever, it is just not going to cut it. You know, Bitcoin, because of miners, can only do 7 transactions per second. Ethereum, if you're lucky, can only do about 20 odd transactions per second. You know, any other, you know, blockchain is just not going to cut it. That's the truth of it, right? So it doesn't say what blockchain they were using. It's not very specific about that. But, you know, you'd have to say, you know, Ripple might be there, you know, or someone like a Ripple, because seriously, there's not too many people that can process 6,300 trades per second. And I know Ripple's got a system that can do like 50,000 trades per second. So essentially, you know, you'd have to wonder, you know, who's actually doing it. So there's a consortium there of Axoni, and I wanted to know basically who Axoni is, because I like to look up just, you know, the relationships. And if you go to Axoni, if you can read this, serves the world's largest financial institutions, capital market service providers with full stack blockchain solutions. Okay, it's a capital markets technology firm that specializes in distributed ledger infrastructure. The company was founded in 2013 by digital ledger entrepreneurs and cryptocurrency specialists. Okay, so it's pretty much up there. And if you look at the investors within Axoni, again, it's all the names that we come across every day. You know, you've got JP Morgan in there, you've got, you know, Citigroup, Wells Fargo, you know, private equity, Anderson and Horowitz, Goldman Sachs, which is all very interesting. So there is a big interconnection here. If we go to DTCC from Crunchbase, these guys, you know, spend a lot on IT. Their IT budget something like about 139 million a year, as you can see. These guys have basically acquired these two parties, Counterparty Link and AVOX, is it? They're basically the competitors, according to Crunchbase. Euroclear, which is the Euroclear payment system, Clearstream, which is another payment system in Europe, and basically, what is it? Calistone. I can't even see that, I'm half blind, but so you get the general idea. These guys have been acquiring other businesses, and if we go to those acquisitions, they bought Counterparty Link, which again, you know, is a know your own client, you know, rules relevant, you know, financial information, that sort of thing. You know, it's a system with technology to make it easier to basically identify, you know, the counterparty, the legal name, you know, the counterparty links, the database, the credit, all that sort of thing. So they bought DTCC, bought that for compliance, which doesn't surprise me. And AVOX, they bought AVOX, you know, again, which is in the financial services industry, for legal entity data. Okay, so that's even more important to make sure the company is properly incorporated and all this sort of business. So going forward, if we also look at the other investments that DCC have invested in, and this is what I'm saying, it's like a, like a web, like a spider web. Everyone's invested with everyone. They've also invested in Digital Asset and ACADIASOFT. Now, ACADIASOFT develops and markets derivatives and collateral management solutions for institutional investors, right? So they develop solutions for the institutional investors to increase, efficiency and to basically report back to the shareholders, bondholders, and regulators. And that's pretty important. And again, if we look behind who's invested in Acadia, it's the same names we keep coming across, that are partners with R3, that, have something to do with Ripple, again, or Ripple is in direct competition with. We've got UBS, SocGen, Citigroup, BNP Paribas. Again, these guys are all partners and invested with R3 as well, invested in R3's technology as well. So I think that's quite interesting just in itself. It's a web. Everyone is connected with everyone. No one wants to miss out on anything. Again, if you look at more of Acadia getting more money, again, Citigroup, HSBC, JP Morgan, SocGen, just recently at London Stock Exchange and Euroclear are the most recent investors. The next group has invested with them as well, and they offer electronic trading platforms and risk management platforms for the professional market, or the professional trader, or the professional fund manager. So all these different companies don't want to miss out on all this incredible technology and this incredible blockchain technology that's happening. DTCC is also invested in Digital Asset, and Digital Asset is basically a software company that develops distributed ledger technology solutions for the financial service industry. So again, they're all connected. And what I think is interesting about this one down here, and I picked this up, they're looking at derivatives and foreign exchange and everything else. This crowd has also got strategic partnerships with Accenture, Broadridge, and PwC. And PwC, if I remember rightly, also made an investment in VeChain, VET. Now, VET is a coin that I like very much, and PwC, I'm absolutely sure of it, has made an investment in VET, and also another chartered accounting firm, which has a lot of money, is Deloitte. They've also made it an investment in VET. So they're all getting involved in investing in blockchain. And, this is a web, a spider's web. Everyone is interconnected to everyone, okay? So the fact that the digital asset DTCC's made investment in, they also have a connection with PricewaterhouseCoopers, who also made an investment in VET, which there is an absolute connection there. Now, if we go to the next thing, digital asset, Jefferson Riverson Capital is also invested in, so is Goldman Sachs, and these are all very, very well-known names. If you go down the list, more people invested, and JP Morgan next, which we spoke about, even Australian Stock Exchange. And the interesting thing about that is the Australian Stock Exchange this year has made an announcement they want to go distributed ledger technology. Okay, now, we've got Santander here, who's invested in Digital Asset, which DTCC has. Now, Santander is one of Ripple's clients. Okay, so Ripple does business with these guys, and they're one of the first clients to start using XRP. So they're actually invested in this crowd, and DTCC has also bought this crowd. So there's just so many interconnections here, and we've got the same names here: Goldman Sachs, Citigroup, BNP, Australian Stock Exchange. So it's just like this big puzzle. Everyone's connected to everyone. It's quite amazing. Absolutely amazing as far as I'm concerned. Also, competitors of ACADIASOFT, according to Crunchbase, are Cloud Margin, OpenGamma, and Tribe Optima. Now, all these are basically, risk management systems for derivatives trading. And it'd be interesting to even look at these companies to see who's invested in these companies. And it wouldn't surprise me if it was the banks, or even if it was the big chartered accounting firms, you know, or even a DTCC as well. But, you know, we can only do so much here. But you get the general idea here, right? I mean, everyone's investing in everyone. You know, even ACADIASOFT is invested in Protocol, which is basically, you know, you know, a scalable, exceptional base workflow software solution, you know, for collateral and this sort of thing. So, you know, the list just goes on and on and on. Number three, also another point, is Ripple also, and this has been mentioned by other people, you know, has on their board DONAHUE, and he's been on their board since 2015, and he worked for DTCC for 26 years. This guy has got incredible experience, and he basically is an advisor to Ripple, which I think is very interesting just in itself. Now, it doesn't mean to say that DTCC are going to use Ripple as their distributed ledger technology. We don't actually know that, because, you know, they're trying to, with all their other connections and all their other investments, create one themselves. But it's just, excuse me, it's just interesting. I need a drink of water. It's just interesting how there's just this interconnection again, this consistent web thing going on. And, you know, this fellow is very, very experienced and is an advisor to the company. And again, you know, his main thing, you know, when he joined XRP with this article, which was back in 2015, June, he said he was very interested in the capabilities of distributed payment technologies and how they offer incredible, you know, improvements compared to SWIFT, which loses money and charges an arm and a leg for anything, and people don't get their money, or, you know, it takes 3 months sometimes. And he just found it, the cost effectiveness of it and the global payment system and what it could do. And, you know, and he was even saying in 2015 that Ripple was a clear leader in this space, and that he was looking forward to working with Ripple Labs to deliver some incredibly exciting possibilities. So, you know, this guy would be a huge advocate for Ripple, a huge supporter. There's no doubt about it. And he would have incredible connections still with DTCC, working for them for 26 years. So you would have to say, just on that, there is obviously a direct link. It's a very positive direct link. And, you know, this guy would be a big advocate, obviously, to the people that are now at DTCC. But it's not to say that they may not use their own distributed ledger technology, but it does make it all very interesting with all the different connections involved. Again, I just wanted to bring up something else which I thought was quite interesting too, which is sort of related, but it's not. An article that Brad Garlinghouse came out with back in 2016. You had all these different banks, and we've seen all the names and all those investments, you know, that we've just gone through. And, you know, he mentioned at the time, Brad Garlinghouse mentioned at the time, that the banks were bringing out their own bank coins for utility, you know, and they were calling them utility settlement coins. And I just thought it was a very interesting article, because he was basically saying that it's really stupid for them and very misguided to do that, because he was basically saying, you know, people are not going to use, or the world are not, they're not going to use a bank utility coin, because it basically, you know, puts people in the same position as if they were using the bank in the fiat market. He basically said, you know, the bank would issue their own digital asset or their own utility coin with its own set of rules and its own governance, which I tend to agree with. And it would also still give the banks their own monopoly, and they could effectively, through their own ledger system, their own DLT, distributed ledger system, charge what they wanted, and it would stop competition. And I do agree with that, actually, I have to say. And if that's the way the banks are going with even these investments, then, you know, I'm of the view of Brad Garlinghouse that this just won't work. You know, and you know, he pointed out that at that time there was Citi's coin and there was Goldman Sachs coin. Now I don't know what's happened with these coins. I haven't heard anything for a couple of years myself, but to me it just doesn't make a lot of sense. And the question is, what would these coins be backed by? Would they be backed by the bank's revenue? Or would they be backed by a basket of currencies, or what? It doesn't make a lot of sense, and it would still enable the banks to continue their monopoly. So, and also the banks wouldn't be independent, okay? So you're talking about, you know, a digital asset that would be totally dependent and basically centralized, which, you know, I don't think makes a lot of sense at all. He obviously, you know, felt, and I do as well, that XRP is decentralized. You know, it's owned effectively by the users. You know, anyone can use it from the ground up. It's not owned by anyone. You know, it's not owned by one central authority. And again, you know, it's going to have the most liquidity, and, you know, it's not a monopolistic type of scenario. So I think that's very, very interesting what he said. And you know, it sort of makes you wonder and ponder when you think about all the investments that are going on, and the web of interlinking between different organizations to try and create their own distributed ledger system. It doesn't mean they're still going down that route of having their own coins. Look, time will tell. It'll be very, very interesting. Yes, there is a connection with Ripple and R3 that we know about, and it's been disclosed publicly. The question is, yes, we know R3 is working with DTCC. The question is, will DTCC, with the link they have with Ripple's advisor, Mr. Donahue, who used to work at DTCC for 26 years, will he be an absolute positive advocate for getting Ripple's technology into DTCC, who happen to, you know, settle and manage, you know, 1.6 trillion, quadrillion, I should say, not trillion, quadrillion of, you know, derivatives as well as physical assets. It's going to be very, very interesting time going forward. Anyway, guys, I hope that, excuse me, I've got a bit of a cold. I hope that helps. And look, this is just information only. I don't know your financial position or anything like that. It is food for thought. That's all I'm saying. It's very much food for thought. We keep it in the back of our heads and see where it takes us. And I think it's going to be a very interesting year this year, and a very exciting one. Thanks, guys. Look after yourself. Be kind to yourself, and I'll talk to you soon.